Powell lowered interest rates. Jerome Powell, the Federal Reserve, lowered interest rates today by 25 basis points. And the only reason that the Fed did this was because the markets expected it, and Powell didn't want to disappoint the markets. Well, the markets didn't get the memo because the Dow Jones dropped over 1,100 points today. It was down with 2.5% on the day, and that was the best performing of the stock market indexes, although the Dow was down today for the 10th day in a row. Now, a losing streak that long hasn't happened since 1974. And, Gerald Ford was president, and we were in a brutal bear market at that time in the 70s with all the inflation that we had back then. They had a streak of 11 consecutive down days. So if we're down again tomorrow, we'll tie the all-time record. And if we're down again on Friday, which we could easily do, I could easily see the market down another 2 days, we would break a record. The Dow would have its longest losing streak in the history of the Dow. So that would include like the years of the Great Depression. So it's very rare that the Dow is down this many days in a row. In fact, I was, commenting yesterday, just watching all the news coverage of the stock market and just looking at how bullish everybody was. And of course, the NASDAQ made a new record high yesterday, even as the Dow was continuing its losing streak. And in fact, the breadth of the market has been very, very bad over the past several weeks, as investors have been enthusiastically buying anything speculative with a symbol, including cryptocurrencies or Bitcoin. You've had this animal spirits that were running wild on Wall Street based on optimism over Donald Trump and this super business-friendly government. And nobody was bearish. Everybody was bullish. The market could only go up. And to me, it looked like a top. Like, everybody is wildly optimistic, and nobody could see the risks. And there were a lot of risks. There are a lot of risks because we had a very expensive market. The market was expensive before Trump won, and it became even more expensive after. But it was overlooking some very significant headwinds in the fact that we actually have a weak economy with rising inflation and rising interest rates. So this is a toxic combination for the markets. But investors didn't realize it. Today was a big wake-up call with Powell maybe inadvertently pulling the rug out from under the stock market, the rate rug. And the market collapsed because even though investors were prepared for the 25 basis point cut, I guess they weren't prepared for what came next. One of the things that Powell indicated was that, or the Fed, not just Powell, that there will be fewer rate cuts in 2025 than the markets anticipated. I think prior to today's announcement, the markets were expecting 4 rate cuts in 2025. And I think the markets had already adjusted that down to maybe 2 to 3. So one of them they kind of took off the table. So people were expecting a hawkish cut today, in that the Fed was going to cut rates, but simultaneously indicate that it wasn't going to cut as much as it had thought before. But I guess the markets hadn't fully priced in or considered what that means, because this whole stock market rally has been predicated really on lower rates, and the idea that this new easing cycle is going to propel the market higher, just like prior easing cycles. And I've known that there was going to be a lot of bumps on this road because I knew that the Fed was not making the progress on inflation that it had believed, or that it was claimed that it was having. And I think this was reality setting in when Powell talked about how inflation had picked up, how inflation was higher than the Fed had hoped or had anticipated, that it's taking longer to get inflation down to 2%. In fact, he said in the Q&A that he thinks it may take 1 or maybe 2 more years before inflation goes down to 2%. Now, I don't think it's going down to 2% at all in 2 years. So it's going to be a long wait. But if the Fed is going to have to wait 2 years to get inflation back down to 2%, well, it's going to have to be higher for longer than the markets expected. In fact, Powell even indicated that the neutral rate, the rate that the Federal Reserve believes is neutral for the economy, not stimulative, but not restrictive. They notched that up from maybe 2.8, 2.9% to 3%. And so that also means that there's fewer cuts necessary, maybe one less cut, to get down to where the Fed considers policy to be neutral. Now, the Fed did say that they still think they're well into restrictive territory. They lowered interest rates now down to, 4.25, 4.5. So we're now a full 100 basis points lower than the peak. Although, despite this 100 basis point rate cut, the yield on the 10-year Treasury, which closed above 4.5 today, is now better than 80 basis points higher than it was when the Fed started to cut. So the Fed went down 100, but the market went up 80 on the 10-year and even a little bit more on the 30-year. This hasn't happened in recent times where the Fed has been cutting and the market has been moving in the other direction. And this shows that the markets are not believing the Fed to a degree. They're concerned about the growing deficits. In fact, they have this continuing resolution that is working its way through Congress now to keep the lights on, and that includes $110 billion of new spending in addition to all the other spending, an extra $110 billion. Also, they threw in a raise. I guess that Congress is upset they haven't gotten a raise in the last 10 years, so they slipped a pay hike for themselves into this continuing resolution. But that alone adds another $110 billion to the debt over the next year, in addition to everything else that's adding. They're talking about the Doge, commission to cut spending. They're already increasing it beyond where it already was. And in fact, the House of Representatives passed this Social Security Fairness Act. Who's going to be against Social Security fairness? But what it does is it increases benefits to civil service workers who are getting less benefits. Now this is going to change that so they get full benefits. That costs an extra $20 billion a year. Just throw that onto the pile. And of course, if they estimate $20 billion a year, it's probably going to cost a lot more than that. But these guys are still adding on new government spending as deficits are exploding out of control. So the bond market is concerned about this. Now, I think it would be a lot worse for the bond market if the dollar was falling, but it's not. The dollar surged today to a new 2-year high, dollar index above 108. The euro, I think, is it down to 103? Let me check where it is. The euro is trading at just under 104. So 103 and 3/4. It closed. It's up a little bit in the evening. It was at 103 and a half. But dollar index above 108. So the dollar is soaring. It's the only thing that was up today was the dollar. Everything else, the stock market, the bond market, the Russell 2000 was down better than 4% on the day. And, the Russell 2000 is now down 1% since Trump was elected. A couple of weeks ago, it was up 9%. So we've had a 10% decline, now a full-blown correction in the Russell 2000. The QQQ was down, that's the NASDAQ 100, was down 3.6 today after hitting a record yesterday. In fact, several NASDAQ stocks had some pretty big reversals today where they hit new highs and then they got clobbered later in the day after the rate hike. But everything was down except the dollar. Gold was down about $60 an ounce today. It's up about $10. Now it's up $30. I don't know. So now it's back above 2,600. It's just regained. I don't know what just happened. I looked at the price of gold 10 minutes ago, and it was up $10. Now it's up $30. So it's regained half of the $60 loss already. So we're back above 2,600 at 2,612, but we were down below 2,600 when trading closed. But you know what's amazing? The gold stocks, again, got absolutely hammered